but I would also suggest that you might consider an alternative that would go a bit farther, namely taking servicers out of the loan modification process altogether. Servicers were never in the loan modification business. They're in the transaction processing business. And we're trying to get them to enter a business line that they aren't used to doing, and to expect them to succeed in that is really asking too much. And the way to get them out of that would be having some federally administered loan modification program where you could do this under the bankruptcy power. It would not necessarily have to be done through bankruptcy courts, even though that would certainly be one way, and it would not necessarily have to be a repeat of the Chapter 13 cram-down legislation that the Senate failed to pass a couple years back. And you could do this instead through something like a mortgage-only bankruptcy chapter, where you have an immediate triage between homeowners who can pay and those who can't. And if they can't, have an expedited foreclosure proceeding. So if it's an empty house, move it back on the market as fast as you can. But if the homeowner can pay, give them a cookie-cutter mod, including principal reduction. And if you did something like that, that would certainly get rid of the second lien problem altogether. I mean, you would have another problem potentially, which is that you might have 4 very large insolvent banks. But if that's a problem that exists, whether or not you recognize the losses now or later.